Hi everyone, Tom Brody here, the Found Money Guy. I work with companies of all sizes to grow their businesses by finding money in places they never even knew to look. Today is edition number 2 of my video newsletter where I answer questions from people who've seen my videos and want just a little more information. I plan to do this on a weekly basis, so if you have a question about how the Found Money Guy, that's me, can help your business, please send me an email at the address shown below, tom@tombrody.biz. Okay, this edition will address a question on cost segregation. Now, cost segregation applies specifically to owners of commercial property, and this subject tends to be a little technical. So for the purposes of this newsletter, I'm going to keep my discussion at a pretty high level so it's easier for everyone to understand. If anyone has a question, please watch the entirety of the video, and if I still haven't answered your question, please contact me at my email address or cell phone, both which will be listed at the end of the video. So this question comes from a business owner who just purchased a recently built office building. He's new to owning commercial real estate, so he's not too familiar with cost segregation. And as I mentioned in my first newsletter, for anyone who sends in a question, I'll never use your real name. So for this email, I'll call him Robert. And Robert writes, "Hi Tom, my company recently purchased a newly constructed, relatively small office building. As this is our first experience with actually owning a building, I was doing some research on the tax implications of commercial real estate and came across your video on cost segregation. With all the DIY, that's do-it-yourself, craze and the different apps out on the market, why can't I just let my accountant handle this cost segregation thing? I mean, we have access to all the detailed construction drawings, including project costs. Why can't we just sort through those things and assign them the proper categories like a professional cost segregation firm would do?" Well, Robert, thank you very much for the email. And you're right, with all of the DIY craze out there and everybody trying to do their own thing and save money, you would think that there would be an app that you could just plug in your numbers and it would spit out a result. Well, and there are those kind of applications out there. However, those tools are good and give you an initial estimate, like for feasibility purposes, but it is not a good idea to use a DIY approach for your entire cost segregation study, and I'm about to tell you why. But before I get into the reasons, I want you to know that the things I'm about to discuss are not just my ideas, they're shared by the entire cost segregation industry, or Cost Seg for short. You may not have realized it, but yes, there is a Cost Seg industry, which means there are many firms doing these kinds of studies. So it's important that you choose one that you trust and one that you can ask as many questions as you need. In fact, one of the resources I used in preparing this response was an article from 2016 titled, "Is Your Cost Segregation Study Audit Proof?" It's written by Jeff Glass from a company called Bedford Cost Segregation. It's one company, that's all they do is cost segregation. So here are the 4 main reasons that a DIY approach to cost segregation is not a good idea. Number 1, failure to correctly identify hard and soft costs. Number 2, failure to adhere to the preferred report format. Number 3, lack of previous cost segregation experience. And number 4, lack of audit defense. Now let me go into more detail on each of these. Number 1, failure to correctly identify hard and soft costs. If you don't correctly assign both the hard and soft costs to the correct property classification and recovery periods, your result could end up being either too generous or too conservative, depending on the errors made. Too generous may trigger an IRS audit. Too conservative means you miss out on savings by underestimating the results. Neither one are a good choice. Number 2, if you fail to stick to the preferred report format and narrative style expected by the IRS, or if your report looks strange or is too hard to follow, that will indicate that perhaps someone inexperienced has prepared it. Just that appearance could trigger an IRS audit. Number 3, lack of previous cost segregation experience. If the person preparing your cost seg report is not thoroughly experienced in all the items that such a report needs, that alone could trigger a closer examination by the IRS. However, if an IRS examiner sees that the company that prepared the cost seg report is a known entity in the cost seg industry, they'll probably not look too closely at the details. And number 4, and probably the most important reason not to DIY a cost segregation report is audit defense. The chances of being audited by the IRS are always small, but they are not zero. A cost segregation study by itself does not increase the chances of an audit, But if a cursory review of your filing catches the eye of an examiner, you'll want some backup when the IRS sends you a letter. And that's why you need an independent third party who is skilled in Cost Seg to handle your study. If at any time our work, methodologies, or calculations are challenged or scrutinized by the IRS, Stride Solutions and our tax teams will offer the defense support necessary to explain and illustrate our findings. We follow strict IRS guidelines, revenue rulings, and case law. We also utilize the 2004 IRS Techniques and Guidelines document. So in conclusion, I know you want peace of mind in all aspects of your business. And you can rest easy in knowing that since the start of Stride Solutions over 16 years ago, we've had 0 disallowances from the IRS and have produced engineering studies in all 50 states, serving our clients in multiple disciplines, including cost segregation, research and development tax credits, and property tax appeals. My name is Tom Brody, the Found Money Guy, and if you found this video valuable, please subscribe to my channel right now. Or you can also go to my website, thefoundmoney.com, sign up for my email list, and you'll receive a free outline of the other ways I can find money in your business. If you're ready to start finding money right away, you can schedule a meeting with me right now, also from my website. Remember, if you have a question that you'd like me to cover at my next video newsletter, please send me an email at tom@tombrody.biz. So, until my next newsletter, my name is Tom Brody, and I am the Found Money Guy.